Hey there, YouTube family. Tomorrow is an interesting earnings day, so I wanted to jump on here and go over some of the companies that are in the Moo calendar set up to report tomorrow before or after open. It's showing that we've got Target, Norwegian Cruise Lines, Rivian, and AMC in the crossfire. Those are the ones that interest me. Now I'm going to give you guys some technicals and fundamentals on a couple of those stocks. Before we dive in, I just want to review with you guys the current market conditions that we're in both last week and going into this week. Now, last week was actually one of the worst weeks of 2023. We saw selling pressure bringing the markets down to that critical range of support that I'd been calling out to you guys in almost every video of 4,000. We saw it be between 4,000 and 3,950 on the S&P 500 as measured by the SPX. Now, I've been saying that ever since we hit 4,200, that for the bullish narrative to stick, that we needed to see the markets validate a further run up by making a higher low. And I've called that higher low that it should be around the 4,000 range. Now, I've also pointed out that the 4,000 range happens to coincide with the 50-day moving average, which would be a natural place for the markets to come back to and bounce off of if it were going to attempt to do another push higher. For the last 5 days, the market appears to be consolidating at this critical range. If the bullish run was truly bullish, in my view, it would have made sense that when we got to this level, that we would have seen an increase in volume and that bounce off of that 50-day moving average, which so far we have not gotten. So it's important that when we get to these critical crossroads in our technical analysis that we acknowledge what's happening. That isn't very bullish. Having said that, I think that there is still a strong possibility that we're going to move up this week to backtest the 4,100 range before the markets could break down any further. Now, a lot of people have pointed to the economic data that the markets have been digesting that it got recently. They've been believing that the markets have not priced in the correct path of the interest rate hikes ahead of us, and that's why the markets have turned bearish. I believe that that is part of the story. I believe that's true, but I also see that there are some key technical levels that seem to be playing out like clockwork. I'm going to go through those with you guys today. I want to remind everybody about a past video that I did comparing the start of 2022 to the start that we've had in 2023. It's incredible. They say that history does not repeat itself, but it rhymes. And I'm seeing some strong comparisons between these two time frames. Now, I'm going to keep this very simple. In 2022, the markets formed a double top. After that, it suffered a small sell-off. And then it rallied back above the double top by 100 points. And then after that, the momentum ran out, it lost momentum, and it had the first big sell-off of the year, which was over 20%. It was the first big drop of 2022. Now, amazingly, this entire scenario is identical to what we've seen so far this year. The markets gave us an ominous double top. It sold off. It recovered and reached 100 points above the 4,100 threshold to the 4,200 range. And it's been under selling pressure since. So the reason that I point this out is that I believe pretty strongly that this is a very critical moment in the markets. If we hold that 4,000 range, we make that higher low, then these markets will be confirming a potential bullish trend moving forward. But as I've been saying, if we fail to hold 4,000, we are likely to see a very strong sell-off acceleration. So what I'm expecting right now is at bare minimum, a move up this week, a back test to 4,100. Now, if we don't see volume and acceleration of buying at 4,100, I would think at that point that it would not be unreasonable for us to assume that some dark days in the market are ahead of us. This is the Stocks with Josh show, guys. Thanks for hitting the like. If you want daily stock and crypto insights, please hit that subscribe and hit the YouTube all notifications bell. As always, do not fall for scammers in the comment section. They use my name, they use my picture, they impersonate me trying to get you guys to contact them on WhatsApp and Telegram. It's not me. All right, guys, let's talk about the move that we're seeing today in AMC. Now, I'm going to pull up a chart for you guys that I actually gave you guys on this page 2 months ago when AMC was under $4. On this chart, I gave the price prediction of AMC hitting $7.65. Well, we hit that today, and we actually went as high as $8.19, and then we quickly sold off back under that $7.65 range of resistance, just like I gave it to you guys like clockwork. At that time, I called AMC a buy under $5 and a sell in this range. Now, it wouldn't shock me to see another burst up as high as my other target of $8.91, but I think that there's going to be profit taking at this level because I want you guys to keep in mind at $7.65, AMC has run up 100% in a very short time frame. Now, I'm going to give you guys my brief, unpopular, fundamental view that I've shared before on AMC, and that's that these guys just have way too much debt. They wasted the meme stock momentum that the market threw at them, and they are chronic share diluters. AMC has only ever been a swing stock in my book. I don't actually believe that any sensible wealth building investor could view AMC as a long-term hold. Sorry, AMC Army, that's just my 2 cents. I've traded it, I've made some money off of these strong moves, but I get out just as quickly as I get in. AMC has immediate support right now below $6.17, and I think it's got max resistance above at $9.64. Right now, to me, that's its potential trade range going into earnings. There is no volume sell signal for AMC right now, which means that there could be an additional pop potential in the stock going into earnings tomorrow. The fundamental reason that we saw this pop today was because some positive news that I think has coincided with the earnings date. A judge has agreed to have a hearing for the class action lawsuit that is against AMC to block the conversion of the APE shares into AMC common stock shares. This money grab dilution move by AMC management has been temporarily postponed, giving shareholders temporary hope. AMC's short interest is at 23%, which is why we see these strong moves up in AMC when positive news like this comes out. There's a lot of money positioned against AMC, and that can be a very dangerous and risky trade or a very dangerous game to play. Now, on the bigger topic of movie theaters, I personally go to much fewer movies myself these days. I used to be a huge movie goer. Right now, if you were to go to a movie, your top picks are Ant-Man and Cocaine Bear. And I read an article today that Ant-Man was fighting hard to keep Cocaine Bear at bay, which, if you want to stop and just think about it for a moment, I don't believe that this is going to go down in history as the golden age of movie theaters. I would say that that's probably behind us. There was a time when Shawshank Redemption, Jurassic Park, Pulp Fiction, and Forrest Gump were all out on the same weekend, slugging it out for the limelight. So it's very likely that the golden era of movie theaters is in the past, not right now between Ant-Man and Cocaine Bear. Okay, guys, I'm going to cover another hot earnings play in just a moment. I want to take a quick station break for the Moomoo Investment app. There is a special offer for the Australian audience. You can open and fund an account to get up to $110 guaranteed AU in cash coupons. And then for the US audience, if you open and fund an account, you can get up to 17 free stock. 2 of those can be guaranteed ChatGPT AI stock picks. Screenshot the exact offer for all the details. Moomoo is a free-to-trade exchange with one of the lowest margin accounts available for retail traders. They've got your free level 2 data as well as the 8 smart order types, as well as a great earnings calendar to stay on top of your favorite companies when they're reporting what the results are going to be. You can easily add the scheduled earnings event to your phone's calendar to set alerts pre and post market. Get better trade tools. Get your free stock and start investing today. Okay, let's review Rivian. There is a very strong fib resistance level for Rivian at $21.35 that the stock just hasn't been able to break through. Now, I got a volume-related sell signal for Rivian on February 2nd, and since then, the stock has seen really a lot of weakness. There is support for Rivian as low as $15, and leading into tomorrow's earnings, it happens to be that volume is down, which is actually one of the key signals to determine strength in a move. So right now, that is not very bullish. Now, I want you guys to check out this headline news for Rivian. Rivian faces cash burn, demand concerns with Q4 earnings. It goes on to read, Rivian is expected to post another big loss for the Q4, while staff turnover and consumer demand for its EVs in this economic climate pose other concerns. Now, I am particularly concerned about the staff turnover. That was what really caught my attention this morning. Remember, when Volta lost its CEO, that was absolutely an early sign of the talent jumping ship. And I have to ask the question, is that what's going on with Rivian right now? As you have heard me say before, people are the problem. People are the solution. If these guys are losing key talent, that is a very bearish sign. I don't see that as being very bullish for Rivian right now. And if you combine that with some of the bad technicals that I'm observing in the charts, it could be setting up for some very bad news tomorrow after market. Another article that I noticed today about Rivian is that it reads, fear is in the air. Now, some of you are like, oh man, I'm bullish Rivian. Josh, this is FUD. Now maybe, I want you guys just to take these things into consideration. It highlighted 3 points, okay? They're very similar to things that I've said in the past regarding Rivian. Smart money took profits and got out during the last run-up. We're still in a bear market environment, which is very hard on cash-strapped companies. And with the low volume that we're seeing in the charts, it's very likely signaling low market interest. The smart money may think that Rivian is going to post a weak production outlook for 2023. That's what a lot of people think. Now, full disclosure, I'm not in Rivian. You guys know that I prefer Tesla as my long-term EV play. I also want to point out that Rivian is below its 50-day moving average, which is a very simple technical view that it's bearish. I want you guys to compare Rivian to a company like Tesla. Even with the markets down bad last week, we are still way above the 50-day moving average on Tesla. I encourage anyone who is a beginning trader to concentrate your investments on what's called best in class, and don't fall into the trap of trying to catch the falling knife or get behind the underdog stock looking for that comeback story. Those can be profitable, but it's not a great foundation for a retail investor. But as I always like to say, you do you. This is not a suggestion for you to buy, sell, or hold. This is purely for educational purposes, as well as an opportunity to get a second opinion on your own due diligence and your own research. I'm going to do another video highlighting earnings after this one. Let me know in the comments if you guys are trading AMC or Rivian, or what upcoming earnings event that you guys are interested in. Maybe I'll cover it. Thanks again for hitting the like. Last call to subscribe. I just want to take a minute and wish you guys all great success in your trading today. Peace and blessings, my friends. I'll see you all in the chat.